Okay, good afternoon. I've still been getting quite a few DMs about H4 time theory, what it is, what to look for, the methodology behind it, and I have videos up on my YouTube that go over it. I'm going to try and do an explanation of it that's a very basic kind of breakdown from start to finish, and hopefully it helps clarify enough things so that if you want to use it in your trading, you can. And so up in the upper left-hand corner, I have a couple things, and it's a H4 cycle. What is it? What are we looking at? What time frames? What points of interest are being created at what time, which is important, and where we're at in the cycle. So just looking at this chart here, price is constantly moving and creating all these areas where we're basically just creating new highs, rebalancing back up, rebalancing back down, just creating an efficient market that moves ultimately up and to the right. When we start looking at the 4 hour chart, if we kind of zoom out and take a broader look, we can see that there are cycles that are created. Okay, and that would typically be like a high and lows that are put in. And we could just go ahead and mark these out and see where like these cycles happen. This is a broader over a couple day cycle. And then we have like 2 day cycles. Okay, so if we start looking and zooming in on some of these areas, okay, we have cycles that happen over a much shorter period of time. And we could start zooming in on that. And so we could look at these and say like, well, we were looking at more longer term highs and lows. Well, here's like an intermediate high, which gets broken right here by this candle. And then we'll just use the low of this candle as it's a 4 hour candle and drag that across. Holy moly. There we go. Okay. And you can see that this is Tuesday and what is that? Wednesday the 9th, Tuesday the 30th. So we get sorry, it's Monday, Monday the 30th. We get this cycle where, oh, we don't break it, come back down and rebalance, and then come through. And that's about a week apart. Over here, we got a high that's put in. And this is August 22nd, and we don't close above that high until September 25th. That was about a month cycle. Okay. So when we talk about price creating ranges and cycling, price is constantly putting in all these cycles, and it's like kind of like ICT talks about, where you have multiple cycles and multiple time frames all within each other, and they all work together. And so you have even higher time frame cycles, which would be like this high over here, and then finally gets taken out over here, rebalance, and then we push higher. Okay. So what I've noticed on the 4-hour chart that stands out very obviously is that we get these cycles and we tend to have the same time frame that kind of starts the cycle and ends the cycle. Okay, and I'm going to show you what that means. Okay, so let's just put this over here for reference. So this is a monthly cycle from this high till price closes above it. Let's go ahead and use a blue. Okay, so while we're looking at these points of interest, we want to take note as to what candles are creating these highs and lows and what candles are pushing through these highs or lows. What time candles are creating order blocks, what time candles are creating fair value gaps. All this plays into the H4 time cycle. Okay. So if we look at this high right here, this was a 5 o'clock high. 5 a.m. runs this high over here, and then we have a 9 o'clock candle that takes out this 9 o'clock low. We'll make it red. We'll color code everything so it's easy for our eyes to see. Takes out this 9 o'clock low. And we march all the way down to this 9 o'clock open. Okay. And you can kind of see that really the high that was put in was this high right here of this time cycle. So this was started on a Monday and finished on a Thursday. Okay, so we have on the 4th day, this is where that cycle finishes. All right. And so when we look at points of interest being put in, and if we just zoom in on, let's say, this 3-day cycle, well, how did I choose these? And this is going into when we start to talk about ranges. But we had this consolidation and then we expand out of this consolidation. Well, the highs that were put in, this candle closes above those highs and continues up. We don't get a CSD and it retraces back down. Okay. So this candle starts a new cycle. All right. And I'm looking at the opening of this candle. And as we look at these candles, the cycle is going to continue to broaden out. But if we just start and look at a 3-day cycle, let's take a look at the points of interest that we have. Okay, so we have a 9 o'clock candle that breaks out of the range, closes out of it, and continues upward. So I like this opening price sensitive area. We create a high. Okay, this just happens to be a 1 a.m. candle that creates a high. Okay, we get a short-term low put in by a 9 o'clock candle, consolidates, price runs into this area as a rejection block. Okay, you can see price building below the close into this wick. So if we look at a wick as a balanced price range, then we can mark that wick. Let's do this right here. We'll color code it. Okay. And it's not till we tag 50% of this 9 a.m. candle balanced range wick right here with another 9 a.m. candle where we run the highs. Okay. We reject and come back down. So we get above here and price doesn't want to continue to break out. Okay, so we put in a 9 o'clock high right here. So I'm going to go ahead and mark this. Clone. Okay. And let's just continue to zoom in. Okay. All these are marked as so. Looking good. Okay. And so technically this is the high so far of price action. We get price that continues to slowly make its way up. We run the high. We don't close above it. We get another 9 a.m. candle that runs the high that's holding the range or holding the cycle. Because we don't get a candle close above this high like we had over here, and we don't get continuation, we're looking for lower prices of this time cycle right here. And we are looking for price to rebalance this area. Okay? So 9 a.m. starts it. 9 a.m. puts in a point of interest, a temporary low. 9 a.m. puts in another temporary low, puts in a high. And then we have a 9 a.m. candle that rebalances this whole area, finishing off the cycle. Okay, 9 a.m., 9 a.m., 9 a.m., 9 a.m. Okay, this is one cycle of price. Okay. And so when you identify where the cycle starts, and this is just one example of a cycle, okay, there's many of these that happen over and over and over again, then you can anticipate targets and what price is likely to do. And so that's where the beginning knowledge of the H4 time cycle is created, is by identifying a cycle and being able to put together what time frame is creating what. And if I take these away, this makes sense, right? We have 9 a.m. lows and 9 o'clock lows that have failed to be taken out. Okay, so it's not like this came lower or dipped into this as a fair value gap and came down here and hit this previous high. That might be indicative of higher prices. But we're putting in lows that aren't running out previous lows, creating a staggering, what I like to call it, a staggering set of areas for price to run later. Okay, and they all happen to be the same time. And then what do we get? We get this high gets ran by this 9 a.m. So this area of interest would be marked out. We would look on a lower time frame and we would look for entry short whatever risk you're managing on that position. And we are targeting the major points of interest. So this, you have this right here if you want to take partials. And you can play with this by marking these time cycles out, okay? So if you just said, oh, I got in here and I took it to this first one, you're looking at 116 points. This second one, you're looking at 210 points. This third one, you're looking at 238 points. If you're going to the fair value gap, maybe you think that price is going to come reject this high, and you've still been holding 293. And if you left a runner for the cycle to finish itself, this is what I call a completed cycle. Back to the original open of the candle that started the complete cycle of price, 394 points. This is usually going to be plenty good enough for most people. If you're able to capture over 100 handles with what you're putting on, that should be great for most people. All these other things are bonus. So if you just let runners run, those are nice bonuses. Okay, but that's an example of where we're targeting. Okay, and we can mark all these out. So now if we go back to this candle put in the high. And now we're looking at a broader time cycle. Okay, so this candle put in the high, and what do we get? Price moves down, we get a rebalance. Notice how a part of the rebalance candle for this candle is another 9 a.m. candle. And what do? We run up into, this would be marked out as an order block, but we're looking at, I'm looking at points of interest on this candle right here, as it creates a low, a high, and then goes away. Okay, so this is your area of interest. So I would start marking out the close, and I would look to see how price reacts around the close. I could start off right here in case it just gets into like 50% of this wick, but really I want to see a reaction from the candle body. Okay, so as we look at this and we're looking at what points of interest are created, well, here's our high. We had this other candle that was holding price up with its fair value gap, and that's where we happen to see this candle delivered to. So now it's rebalancing all the way down here, and we get into this fair value gap. So at 9 a.m. with this 9 a.m. running this 9 a.m. low. Okay, so now we're running lows, staggered lows that haven't been taken out. 1, 2, 3, 4, 5, 6, 7. Boom, boom, boom. All those lows ran. Okay, here's a low put in. Another rebalance. Okay, so now if we start looking at a little bit broader perspective, what did we have here? We have a low, we have a fair value gap. Okay, but this low hadn't been ran. We didn't run this low and then go up, so this low hasn't been ran. So we get a low, a high, and a low that finishes off this initial low that hadn't been ran. And so as we start to see this pattern, now look at how much broader that time cycle is and what it completes. Just another balancing of price, keeping it efficient. But you see how the times match up? 5 a.m., 5 a.m. After that, we rebalance up. Okay. And I shouldn't have to really go over this. I'm just going to use a Gambox and not a fib tool. But if I just take this and do the candle bodies, I mean, we're looking at, if you want to add wicks into, you can add wicks. I like to do when we get price that moves quickly, like we had slow price moving up and then quickly um, continues the move back down. I like to take the candle body measurement, and then here we go. 50%, 50%. Okay. Look at the triggers in these areas that are points of interest. Okay, what point of interest is created at what time? We have a close into a fair value gap, 9 a.m. 9 a.m. fair value gap. We have a close right at 50% of this range. We have an open, a 1 p.m. open right at 50% of this range, and it sends price down. Okay, if we're looking at price and all this is being balanced and then continuing further down, and we have this whole area of price that hasn't been balanced yet. Look at this. We have a huge BISI right here. Then when we get to areas of premium, we're looking for moves deeper into discount for bigger time cycles. And so when I say little plays happen all the time, what do we get? We get opening price of this 1 p.m. candle. Price continues down, just creates a short-term low. Okay, doesn't run any lows, but creates a short-term low, comes back up, rebalances, runs the open. Let me add that in here because that's very important. Opening price ran. Runs the open, retraces, and then boom. 5 a.m. targets the swing low, short-term low. Comes all the way down, and we get a run into the below the close. Okay, price retraces back up. Unfortunately, we don't get a run all the way up here. It's pretty dang close. We're almost at like 50% of this, but not quite. But we're looking for some sort of continuation. And so we have a 9 o'clock candle over here that hasn't been ran. This got ran. This got ran. We're nowhere near 5 o'clock. 5 a.m. ended here. So what are we looking for with price? We want to see it start balancing this and some sort of completion of a cycle at a 5 o'clock time. Okay. So again, I'm not going to mark out all these numbers for you. We can do it one more time. If we get in somewhere right here, let's just say we get in, we watch the open, it manipulates up, we see something we like, we get in like right here. And we just target the low of this 9 o'clock all the way over here. Okay, that's 154 handles, plenty. So I'm not going to measure all these out. I'm just showing you that when you wait for candles to open and you have logic behind why it's doing what it's doing and where you can target, you can capture hundreds and hundreds of handles in a week. Skipping forward, remember, here's this consolidated area. We get price that moves out of that area. So this open is a nice open. It's sensitive. We're looking for a cycle to complete somewhere around here. And lo and behold, we have a 5 o'clock candle that completes this cycle. So if we've seen that happen before, where we get a candle that completes the cycle, all right, um, and this one's kind of nice too because you get the 1 o'clock that runs the low of this 1 o'clock in this fair value gap and then starts the retracement. This completes the balancing. So where does this body end up? Not quite down here. It would have been nicer to complete it down here, completing the balancing of this completely, but we still have candle body gap there and candle body gap right here now because we gap down so hard. Okay, so this leg down, 5 o'clock, low, 5 o'clock, rebalanced at 5 a.m., 5 o'clock. Look at that. That candle body comes right into here and this whole leg is balanced. What are we looking for? We have a run above, back into this range, above 50%. And we run the close of this sensitive level, right? This has been rejected, rejected. Okay. We're looking for the same sort of price action around this area. Um, and if we don't get it, then it's invalidated if we're going short. And then we get more consolidation. Okay, so a high, a low, starts the formation of a short-term high. Okay, another short-term candle body low. Okay, look at candle bodies as well. Candle body, candle body, candle body, candle body. Wicks are going to do the damage. We know that. Candle body, rebalancing, and then a move lower. And we just don't quite make it to the 50% line this time. If we use wicks, we do. That's the benefit of using wicks. So there you get the, but what I'm going to tell you is that you're just going to have to look for, just make sure your entries are good on the lower time frame, so you're not like just entering at the 50% and you get like a run that, like sometimes you get the big wicks that run really high up, you know, then you get stopped out. So look for that confirmation first. All right. So now our time cycle of this whole thing is getting bigger. Okay. We have a low, equal lows right here. This runs through this previous low. Just taps this one, doesn't quite get to this one. This continues down and runs this. So this cycle right here, when I look at this, this isn't the cycle that I'm looking for completion. Okay. Notice how when we retrace or we make a movement away, it's the same candle. Okay. So when I see this, we can't just use every low. Let's mark that red because it's a 9 o'clock candle. What takes out this low? We got a 1 o'clock candle. Okay, so I'm not worried about price rejecting and coming all the way back up here. That's not what I'm thinking. I'm thinking, where are my previous highs, which we have right over here, and where are they sitting at? Because we're going to have more continuation lower. All right. So as the cycle continues, this ain't it. We don't have matching candle times. Remember, we're looking at the cycle. What time is it? What point of interest is created at what time? Do they match up? Where are we at in the cycle? And if we're not expecting a reversal right here because these times didn't match up, then we're still looking for lower prices. Okay, we have a 9 a.m. candle. We show sensitivity to it right here, 9 a.m. and right here, 9 a.m. So a 9 a.m. candle runs this 9 a.m. short-term high. Look at here's a little cycle right here. This closed below this. So this is going to be a area of interest. We put in a candle body low right here, which is a 9 o'clock candle, a short-term high, 9 o'clock candle, a run back down. Look at this, how these candle bodies are forming. Another right around the low. Okay, actually puts in a low wick that goes back into this 9 o'clock candle. We come up, 5 o'clock runs it, but then to really start the new movement down, we get a run up in here, this 9 o'clock fair value gap, running a short-term 9 o'clock high. And then what does price follow up with? Follows up with the movement down. Okay, so we have this area of interest over here, and we have this consolidated area. We had price that ran into this fair value gap after closing out of this range. Okay, and we'd have to continually look back to find the candles that started the range. But I like this right here, and I like this high that doesn't run it, rebalance, and then we end up closing it. So we tap it right here, come back, and then this candle closes above it. Okay, so we have sensitivity to this fair value gap. So we have a 1 p.m. low. We have this fair value gap right here. And so we're going to have two markers on this because I'm going to want to see, do we get what kind of candle in here and what is the reaction out of it. So we don't happen to get the 9 o'clock candle in here, which would have been preferable, but we do get the 1 p.m. that runs this 1 p.m. low in a fair value gap. Okay. And so we've kind of now completed the cycle, and look what we get. We get change in state of delivery. All right. And you can see that now we're rebalancing and we're starting a whole new price cycle. All right. And you can see we can go back and look at all these cycles and where the lows are created. Like here's big movement candle, a high, 9 o'clock, 9 o'clock low, 9 o'clock high, bum, 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 9 o'clock leaves the range, eventually closing above this right here. Notice that these candles run it but don't close above. So this is my target that I'm looking for. All right. And as price continues to move up, we get this right here where we finally balance this candle with a 9 o'clock candle, running this high with that candle. So this high was never ran, 9 o'clock. This one does it. And then the very high that started this whole thing, let's look at this. The high that starts this trend low, the change in the state of delivery with the 5 o'clock candle, and then we close above that high with this candle right here, which is a 5 o'clock candle. Okay, so what do we get? Then we get some consolidation. Okay, we consolidate, consolidate, consolidate all around these highs right here, this high. So this cycle, if we look at this movement up, you can see it becomes sensitive. So again, candle body lows. Look at this. This is 4, 8, 12, 16 hours of price. Boom, moves up. This is starting the move out of this range with continuation closing above this range. Okay, so this is a start of a smaller cycle within a cycle. Opening price. Let's move it all the way across. And what do we get? We have price that's just consolidating around it. Building positions below this open. Running lows. Okay, that's nice. They're not staggering. Look at staggering. This is continuously running and it runs it all the way back down here again. 5 o'clock. We get a 9 o'clock runs it. 1 o'clock runs it. 9 o'clock runs it. 5 o'clock runs it. It's not until the 5 o'clock runs it that price starts pricing higher. And the trend changes. So once we get the 5 o'clock that ran below this open that we talked about way over here, that was so important, that started the cycle to run this high and then start this lower movement. Okay. This opening price was the buy side liquidity run to start the movement lower. We finally get a movement over here after all this being put in and ran. The 5 o'clock runs this open and we get higher prices. And look at this movement upward as we get a change in the state of delivery and we start getting higher prices delivered. Lots of wicks. Remember, still building orders and trying to keep as many people out of this kind of run that we have. And so we have a 5 o'clock high, a 9 o'clock that does a change in the state of delivery. Okay, opening is sensitive. Highs, 5 o'clock high, 9 o'clock high, 9 o'clock low, 9 o'clock runs that low. Short term high, key 5 o'clock low because we have a very important opening price that it touched. 9 o'clock now closes above this high. 5 o'clock runs this high. 9 o'clock closes above this opening price. We didn't CSD and just run the high and reject, closes above. Higher prices. Okay. Openings are very important, and where they're at in the cycle needs to be looked at because they are used very, very frequently, and especially when they are used for important pieces of price action for price to cycle in. Okay. Nice little movement right here. Optimal trade entry. What do we have? Okay. Low. Short-term high. Look for these wicks. Look for this pattern. A low and a point of interest runs this low. Rebalances. Rebalances. Short-term high. Oh, fair value gap. 5 o'clock. 5 o'clock. Fair value gap. Nice rejection out of that fair value gap. Runs this high. Rebalances. Look where the candle bodies are holding. But look what we got. Optimal trade entry area plus this has been holding price right here. We run some lows, some previous lows. Okay, we're looking for longs in here. And then we get a move back up into, imagine that, 1 o'clock. That's a 1 p.m. Hits the previous 1 p.m. open. Boom. Okay. Points of interest. Points of interest. So opening prices are very sensitive in their draws. And we kind of just get this slow kind of consolidated move up over the holidays. One last dip. Okay. Goes right into this, kind of finishes balancing this candle, runs a short-term low. This was the original candle, right? That kind of dipped down here and set the low as far as candle bodies. Candle bodies never started closing lower. They started getting higher and higher. We got wicks doing damage, but got higher and higher. With the logic of orders being built in here. I like this. This is smart money just dabbing into there. And then we start getting, it's holding 50%. Leave the range. 9 o'clock comes back into this 9 o'clock, runs the open, and boom, rejects. Okay, we get some just very low volume price action, which is fine. They love to use that to just slowly work its way up because it's hard for people to hold positions over this time of year when there's just a ton of low volume overlapping movement, just very high resistance. Okay. We're out of the Thanksgiving holidays, Monday, December 2nd. London people, we have a short-term high that's been put in, and we get a run of that. Okay, we run all the way up here, and we run the open of this, which this candle right here was holding all this consolidation up, and then once this candle was created, we got our rundown. So this started the rundown. This was the run back up, the manipulation candle. back up into a balanced price range. This candle started down, open. What does this 5 o'clock candle do? Runs into this 5 o'clock open. Okay, cycles within cycles. And we get broader and broader. And so another boom. So we can use this for multiple things: futures trading, options trading, order block, price, orders being built in here, tags it, runs up, doesn't quite get there, but we do have a pair of equal lows over here that were ran by this candle. And so this candle runs this intermediate term low into a point of interest, same candle. So these are things I'm looking for, and was looking for longs out of here. Okay. And we get it. This almost touches this previous high, same candle. It's not going to be completely perfect at times. Okay, like I would have liked to have seen this touch this and reject. It was 260, so it was 1.5 points away, but that's close enough. And target highs, that's a lot of points right there. It's 176 points. That's more than enough for anybody. So we're going to do a quick recap. Let's see where we're at in this giant cycle right here. And so far we have, this is, if we look at this closely, the highest candle body right now is a 5 o'clock candle. The highest point is this 1 o'clock. So I'm looking at these two to be somewhere that this is going to get run by one of those two candles. So this high actually gets ran by this candle and starts the retracement, rebalances up. We get a run into a previous low, okay, short-term low. High gets ran over here, this high. It's equal highs, but we run the 5 o'clock high. You can see just barely. This was a great short actually. And then boom, we're getting shorts again. And then if we take a look at this cycle, this is the FOMC candle. Look at all these 1 o'clock candles that hadn't been taken out. Okay, so start right here. 1, 2, 3, 4, 5. 5 candles that hadn't been taken out with some others along the way. Back all the way down to these equal lows. And where'd this end up at? I'm sure we could trace this back to something that was of importance, but more than enough handles. All right. And so after tagging this and moving up and creating these staggering lows that got ran, 1, 2, 3, I'm looking for higher prices. And so I'm going to look for each candle to manipulate into some previous like time candle, and it all depends on what kind of trader you are. But see how this goes into the fair value gap, but it's not until this goes into the fair value gap that we get um, the start of the next movement down. And then look what it is. We got a 5 o'clock open, 5 p.m. open. It touches the 5 p.m. open in this 5 o'clock fair value gap. Like, you could take shorts here in Asia, or whenever this reaches. Maybe it's Globex open, and look to hold and say, man, we had this come down here, didn't take this out, so these look pretty tasty. I'm just going to hold overnight. Set your stop loss right up here. If price comes back and takes you out, hey, it happens sometimes. But look at the reward you're risking for a very small, like almost break even play. So yeah, that's the basics to the H4 time theory. It's all about rotating cycles. It's all about what creates the highs, the lows, and the opening prices that are important for price to react from. And that has to deal a lot with ranges. And it's about rebalancing a price, creating an efficient market that is kind of constantly trending higher. And so once you start looking at price that way on this 4-hour chart, it's going to give you so many setups every day that you can just patiently wait for one of these candles to open up and, you know, target the main candles. Sometimes we get PM action, sometimes we don't. Know what's gone on so that you can determine which candle is going to give you the highest probability outcome for your trade that day. Please, if you have any questions, ask them below in the comments. I'm more than happy to answer them. I answer my DMs all the time. I answer the YouTube questions all the time. I am just paying this stuff forward. I want everyone to be successful. I hope it's helpful. I hope that this breakdown, and you can copy this. The indicator's free on my X account. My YouTube channel's free. All the content I post is free. I don't gatekeep. I'm not a believer in gatekeeping because I feel like that's how we all learn, right? Like someone learns something because someone else taught them. Like you aren't just born with this knowledge. So if you have something and you want to share it, feel free to add it. If not, no big deal. But I hope this helps everybody. I hope you understand what I'm looking at as far as major cycles, smaller cycles, and how the time frame should align. And when they do align, that's when you most likely get to see the reactions occur, the reversals, the retracements, and that comes with like an efficient market and a balanced market. All right, I hope you guys have a great afternoon and safe trading. Thank you.